morning from our global headquarters in New York. I'm Manny Scrani. You're welcome to Bloomberg Brief. Let's set that agenda. A tariff showdown. Markets brace for President Trump's latest pledge on tariffs. When will they kick in? The dollar ticks higher. More deep-seek scrutiny. U.S. officials are said to be probing the Chinese AI firm on how it acquired Nvidia chips. And big tech's sigh of relief. Apple's outlook reassures investors after declines in Chinese sales. Intel's revival, the effort pays off. Good morning to you. Equity markets at the moment are taking their lift from tech rather than the threat of raging tariffs this weekend. 25% on Canada and Mexico, possibly China. Or will it be another flash clash like Colombia? Either way, Apple and Intel bolster the narrative. The flow of money. Tech funds took in $6.5 billion this week. That is the most in 3 months, as Nvidia is still down 12% on the past 4 days in the cash. And there's a lot more recalibration to come. January saw the biggest inflow of stocks into the U.S. since 2018, $93 billion, according to the Flow Show. Bond market, we're counting down to PCE and PI. Over the past 5 days, we have retraced by 9 basis points in the 10-year government bond. So we're down by 9 basis points on the AI shock and Nvidia shock that we've had. We'll have Mike McKee with us talking through some of the data ahead on the day. There are other stocks that are on the move. They're in the headlines. Intel reporting better than expected fourth quarter revenue, but cautioned that the push to be more competitive, it's still a work in progress. Micron falling, as Bloomberg reported. The rival Samsung got approval to supply a version of its 5th generation high bandwidth memory chips to Nvidia. And Atlassian surging after the software company reported second quarter results that beat expectations, and they raised their full year forecast. Coming at this hour, we have Viktor Hjort. He joins me from BNP Paribas, and Kulina of Wedbush on the big tech stories. Well, currencies are moving, whipsawing to say the least, after the move from President Trump reiterating his tariff threat on the nation's neighbors, Canada and Mexico. Tomorrow, about $900 billion in goods from both nations could stand to come under tariffs as high as 25%. That is the imminent risk. Kevin Whitelaw is tracking the story. Kevin, what comes to my mind here is we've gone from gradualism at the start of the week, suddenly back to max potential on both neighbors. I mean, this is what you call policy on the hoof.
I mean, you know, we're going to have to see what the actual final result is. So far, all we've really had are a series of pronouncements that do seem to sort of shift almost every day from the president. And so he has given himself his own deadline of tomorrow to unveil this. We'll see if that's actually going to mean something, and we'll see what it actually is that he's planning to unveil. I think what everyone's still trying to understand, and quite honestly, Trump himself may be trying to figure this out too, is what is he really trying to accomplish here? Is this really part of a negotiation where he's trying to get a set of concessions? Or is this really about a broader effort to remake both the idea of the U.S. industrial and manufacturing base, get companies to base more factories in the U.S. rather than its neighbors? Or is it even more about trying to remake sort of the way America's revenues work and move away from income taxes toward tariff revenue? Those are 3 actually different goals, and it's really not clear which of those is paramount in Trump's mind.
And to a certain extent, a lot of commentators are saying this is about creating the sphere of influence, the geographic sphere of influence for the United States of America relative to Russia and relative to China. Here's the thing. This country imports about 4 million barrels of oil per day from Canada and 500,000 barrels from the south from Mexico. That's the carve-out that the market wants to know and understand most of all, isn't it?
I mean, that's definitely one of the big carve-outs. That is what the commodities markets are looking at in particular. And Trump has said he doesn't know whether it's going to cover that or not. I think he's still trying to figure out what his actual proposal is. But that does at least suggest that exemptions may be an element of this if he does indeed go as broad as he's been saying. For all we know, there could be a lot of exemptions. One thing Trump has to balance here, of course, is the potential inflationary effect at home in the U.S. Tariffs have the potential to make that worse. And that was a key pledge Trump made to his voters, was that he was going to bring inflation down.
The Canadian Foreign Minister, Melanie Joly, is in Washington. Now, she's breaking it down in terms of the oil narrative and the border narrative. What she said. Okay, we seem to have just had a... Kevin.
Oh, sorry. Yeah, no, I'm sorry. I thought you were going to play a clip. I apologize.
No problem. My apologies for intonation. It's the Irish in me. I mean, look, this comes down to the hustle. The Canadian Foreign Minister is in Washington. She's breaking it down very much into pieces of negotiation. And she's saying on the border, I think we're getting traction.
Well, I mean, look, Canada has to try to look and see if there is a way to head this off. They're going to talk about all the things they're doing. Trudeau tried this before. And she's going to keep trying this as they try to figure out if this really is a negotiation. The Trump sometimes does want to take what is said by other countries and claim it as a victory. There's obviously the hope that's going to happen. But what all of these countries also have to worry about is if they start making various deals, making various concessions, making various promises, Trump could still turn around and tariff them anyway.
And the risk for China, I mean, we've talked about to the north and to the south, but the risk for China, I would say, has exponentially changed as a result of now the investigation into Nvidia. You have Howard Lutnick talking about, well, look, you know, export controls don't work. You need something else. Has the heat just been turned up as a result of the Nvidia investigation on China?
I mean, I don't think it takes much to turn the heat up on China when it comes to where Trump is. He's been very inclined to go after China over its trade policies for a very long time. It was a huge focus in his first term, and it's going to clearly be a focus now. I think the bigger problem is they can't quite figure out yet how they want to go about doing it. How do they actually put pressure on China without China coming back in ways that could be even more economically damaging to the U.S. U.S. remains incredibly reliant on production and other things that are part of the supply chain from China. It's just not clear that there's a way to sort of get into something without doing really sort of more harm to yourself. And that's what he's going to have to try to balance. He doesn't even have his real sort of trade team in place yet, and so he is sort of trying to operate on this from a bit of a sort of throw it together until he can get his full team into place.
Okay, let's see what the headlines are over the next 24 hours. Kevin Whitelaw, they're tracking the tariffs. Now, Bloomberg Scoop, the U.S. is probing whether DeepSeek is using the chips it says it's using. Officials are looking into whether the Chinese AI firm bought advanced Nvidia chips through a third party in Singapore, circumventing the U.S. restrictions on advanced technology exports. Tom McKenzie is with us. Tom, look, this probe is taking shape from a number of agencies around DeepSeek and how they maybe circumvented these restrictions. That narrative is not new, but what do you think that this investigation is going to press upon?
It's going to press upon trying to find out exactly what chips DeepSeek was using. As you say, this is the White House. This is also the FBI. They're looking at Singapore. They're looking at whether or not China, whether or not DeepSeek in Hangzhou actually sourced higher-end chips than they've declared publicly, possibly from second parties like Singapore. So that is something they're scrutinizing. They can see that Nvidia, for example, gets about 20% of its revenues from Singapore. Nvidia says that is not chips necessarily that are being used in Singapore, but it's booked chips, so booked deals and booked orders. So Nvidia kind of disputing that. Nonetheless, that has clearly drawn the spotlight of lawmakers and officials in Washington. What DeepSeek have said is that they trained one of their most recent models on an Nvidia chip that was allowed to be exported to the Chinese market, the H800. That's what DeepSeek is saying, about 2,000 of those. Question is, do we trust them? Do they trust them in Washington as to whether or not that is the case? Because, of course, there are big question marks, not just from lawmakers and officials, but also other tech companies like Microsoft and OpenAI as to how DeepSeek built a model in about 2 months for about $6 million that has the same capabilities in terms of O1 from ChatGPT, but also Gemini and Anthropic. That has drawn this attention. So we'll see what unfolds, but clearly, the spotlight is on, to some extent, DeepSeek, and to some extent, Singapore as well, to come through with some answers.
Well, of course, it's raised Howard Lutnick's hackles, the Commerce Secretary, saying export controls not backed by tariffs are like playing whack-a-mole, the whack-a-mole model. Now, you've got DeepSeek coming under investigation. You've got Alibaba coming out with new news. You've got a whole host of things. And AI, OpenAI, back in the market to raise capital with a pretty substantial valuation. Who's ready to step up? It's SoftBank, isn't it?
Yeah, Masayoshi Son exactly coming through with possibly 15, possibly 25 billion US dollars. So for all the question marks about, hang on, do we need to be spending this much money on chips, on data centers, on energy, on servers? Well, the answer seems to be from Masayoshi Son and SoftBank, yes, we do. And we're going to be there. We're going to commit potentially up to 25 billion US dollars. That would take SoftBank to being the biggest shareholder in OpenAI. And you're absolutely right. The valuation, my goodness, you've gone from 157 billion US dollars in October in terms of the valuation for OpenAI, potentially to 300 billion right now. Look, Sam Altman's part of the mix around Stargate. He wants to be spending on that infrastructure, the commitment alongside Masayoshi Son and Oracle to spend about 100 billion US dollars just for starters on data centers, on infrastructure, on energy to support the US push into AI. They want to ramp that up to 500 billion. This is part of that story.
Okay, well, they certainly made a commitment. They're in for 18 billion to Stargate. Nobody's stepping back from the capex at the moment. Tom, thank you very much. It's been a pretty turbulent week in tech. Other stories trending on your Bloomberg terminal. This is what we got for you this morning. Apple gave a reassuring revenue forecast for the current quarter. Sales will grow by a percentage in the low to mid-single digits, which calmed investors' nerves. Meanwhile, the results renewed concerns about the iPhone sales, as well as China. Walgreens is suspending the quarterly dividend it paid for the past 92 years. It's a bid to conserve cash. The decision stems from the need to strengthen its balance sheet by reducing debt and improving free cash flow. Suspending the dividend is expected to save around $650 million in the fiscal year 2025. And Samsung's chip division reported a smaller than expected profit due to the increased research and operational costs. Total capital expenditures came in at $37 billion in 2024, and executives said the spending would remain at a similar level. Coming up, keep calm and carry on. That's the message for credit from Viktor Hjort from BNP Paribas. We'll catch up with Viktor in just a moment. Bloomberg Brief, I'm Manus Cranny in New York. We got there, it's Friday, and these bond markets have had a lot to digest. Viktor Hjort is the global head of credit and equity derivative strategy over at BNP Paribas. Viktor, good to have you with me. I just think of the week that we've had. We've had shock therapy in tech from AI. We've had Powell push the pause narrative, really establishing that. And we're just about to get potentially max tariffs tomorrow morning. When you look at volatility, it's not exploded exactly, given that onslaught of event risk.
I think you're spot on. I think there were a lot of expectations at the start of the year and around the election that Trump was going to be a source of volatility. But I think you have to offset that against the fact that there are a lot of, let's call them inherent volatility dampeners in the market right now. I think the key word here is really balance. When you look at corporate bonds, there is a very good balance between supply and demand for bonds, partly because yields are so high. It is much more expensive for companies to issue bonds today than they were a few years ago, including when Trump first got elected. That sort of dampens the amount of supply that the market has to absorb. And when you look at the macro fundamentals that are driving the market, they're also pretty balanced. The US economy is a bit hotter, the European economy a bit weaker. But when you look at things like PMI data, it tends to run pretty close to 50 or a little bit north or south of that. Also pretty good balance. And ultimately, that balance, I think, is what really offsets some of these much more headline-grabbing events that you referred to earlier.
And if I look at the growth story, I just refreshed myself. We came from 3% in Q3 to 2.3% yesterday. But the consumer is strong, growth is steady, employment is steady, and that underpins for you why it's, keep calm and carry on U.S. credit relative to the rest of the world?
I don't think that U.S. credit necessarily is a better story. American exceptionalism is widely appreciated by most people today, and I don't think there is any reason to question it fundamentally. But, people are a lot more bearish on things like Europe, for instance, which clearly has not had a compelling growth story. But it is interesting when you look at the world of credit. Since the day that Trump won the election, the single best performing credit market in the world has been European investment grade credit. I don't think that people necessarily thought so on the day that Trump won.
Does that endure? I mean, you listened to Christine Lagarde in Davos last week talking about an existential crisis or a moment in Europe. The ECB is in cutting mode and may well get to neutral in March.
So I think the expectations for Europe are very low. And I think that's what we're seeing in the credit market. That's what we're seeing in the equity market. It's not a very high hurdle to beat. I also think that when you look at corporate bonds, the backdrop for Europe is, let's call it sluggish growth, dovish central bank, sluggish and dovish. It tends to be a pretty good backdrop for risky assets. It tends to be a very good backdrop for corporate bonds. And my guess is that continues.
The framework of this week for global central banks was very much activist Canada, activist ECB, pacifist narrative growing in the United States of America. So this then pushes us more towards spreads and differentials, 200 basis points difference between us and Europe. As you say, I understand Europe is rising, but that spread differential has a flow consequence.
Definitely, and a positive one, obviously. And I think that when we look at rate risk, we've had basically two kinds of rates risk to deal with. One is the removal of expected rate cuts, Fed rate cuts this year. We passed that with, I think, flying colors. The other rate risk is a bit more tricky. That would be if inflation dynamics start to push the Fed in a way that they actually need to consider rate hikes. So up until now, it's fair to say that high yields are good. Exactly as you say, it attracts demand into the market. Once you go into rate hike territory, the dynamics start to change a little bit. And also for fundamental reasons. There is a debt maturity wall that is quite a bit higher today than it was a few years ago, including 2022, when we had the big rate hikes. Back then, corporates had spent the previous years terming out their debt maturity profiles. They're a bit shorter now. And so if we were to have rate hikes, I think that would be a bearish event for the market. But so far, high yields are good for credit.
Right now, as I look at risk, in the next 24 hours, there's a potential of 25% tariffs on Canada and Mexico. We don't know what it will be. It could be a different calibration altogether from where we start today. But how do you look at the potential inflationary impact of the proposition of Trump tariffs too, relative to the first round, which ultimately were not hugely inflationary?
They're probably more likely to be inflationary this time around. Now, the starting point is obviously, what are people actually expecting? It's not that Trump has been quiet about his intentions here. So I think the expectations are clearly not that we're not going to get any tariffs ever. Question is really what are those expectations? A simple guess from just speaking to people in the market might be that around 10% on Canada and Mexico, maybe 20% on China. That's sort of ballpark what people are expecting. I think the real question is whether we exceed those expectations. That's kind of where you might see a negative market reaction.
I think the line of the week goes to one of our guests who said it's a relative crisis with tariffs. It's just not a full-blown crisis with tariffs. Victor, thank you very much. Victor Hjort of BNP Paribas. Of course, we'll know more about those tariffs when you waken up tomorrow. Certainly during the day, you'll be on your Bloomberg terminal. The dollar is up this morning at the year's high for 2025. The Canadian dollar took a pasting yesterday on that breaking news. Let's see what the tariff risk really turns out to be.
I
our global headquarters in New York. You're welcome to Bloomberg Brief. I'm Menace Cranny. Let's set your agenda. A tariff showdown. Markets brace for President Trump's trade pledges to kick in. The dollar ticks higher. More deep-seek scrutiny. U.S. officials are said to be probing the Chinese AI firm on how it acquired Nvidia chips. And big tech's sigh of relief. Apple's outlook reassures the investors after declines in China sales. Intel's revival efforts pays off. Good morning. Right now, equity markets are taking their cheer from tech, from Apple, from Intel. They seem less concerned about the tariff risk that the President of the United States has flown up again. The risk of 25% maximum kind of tariffs day one tomorrow. Nomura still warned that Nvidia is down 12% on the week. The money is flowing into tech funds. This week they took in $6.5 billion. That is the biggest inflow in 3 months. And in January, equities pulled in $93 billion, the biggest inflow since 2018. The bond market, in part, supports the longer duration play, the 10 basis points. We were down 12 basis points at one juncture on 10-year government bonds. We pulled a little bit of that back. Strong consumer spending yesterday. We're counting down to the PCE. We'll talk you through that in just a short while with Mike McKee. 453 is where we are. As I said, it's been a big week for big tech, starting with a potential grey swan in DeepSeek and rounding it off with the earnings from Apple and Intel. Intel delivering a revenue beat for investors watching out for signs of the turnaround, while Apple keeps investors happy with the forecast. Joel Kulina is managing director for Wedbush Securities. He's with me now. I mean, I've got to say, there's deep skepticism here. This market was soothed by a call for low, mid-single-digit recovery. China is bruised, and iPhones are under pressure. Were you convinced on the call?
You know, it's Apple's become one of these stocks. It's a cult stock on the retail side of things, and it's been such a big winner performer for so many households across the globe. On the institutional side, it's a completely different story. Long onlys have been underweight this thing for years. Hedge funds, it's sort of the perennial funding short. And like you said, there's just been a lack of growth and to some degree, a lack of innovation. And so far, Apple, up until recently, was trading extremely negative on almost every negative check that we've gotten, whether it was share loss in China, lack of, positive reviews regarding the rollout of their AI, Apple Intelligence. And here we are, stocks within striking distance of highs. And the quarter was okay, not great. Clearly, it's their services side of the business that's doing the bulk of the heavy lifting to the story. But I did think Cook did a really good job last night in the call, kind of massaging fears around kind of China, was really just kind of saying that there's channel adjustments ongoing. He was hopeful that stimulus would kind of come through. And then even around AI, he did say kind of regions where Apple Intelligence has been rolled out, they're seeing more accelerating upgrade cycles. So we'll see. I can tell you the institutional side, people are skeptical, but it's a stock that just it's Teflon at times, and it's a tough one to fight.
Brilliant description, Teflon. How much debate is there out there about peak Apple? I'd put this to you because Zuckerberg on the Joe Rogan podcast, this is what he had to say. They've used their platform to put in place a lot of rules that I think are arbitrary. Well, we know what Zuckerberg did with rules this week. And I feel that they haven't really invented anything in a great while. This is the big issue, isn't it? Steve Jobs invented the iPhone, and now they're just kind of sitting on it 20 years later. That is the big risk, isn't it? They need to fundamentally change the upgrade cycle, and they need to convince me I need something new in my life.
Yeah, and that's been part of the problem. And again, I know the stocks recovered the past couple of weeks, but part of also the negative, bearish narrative earlier, coming out of 24 was, increasing reports that even the iPhone 17 and 18 just weren't going to be driving a super cycle because of the lack of major hardware upgrades. And that's been a fact. And obviously we're all dealing with sticky inflation across the globe, and people, sort of like cars now, are just not rushing out to get the new iteration of the phone every 2-3 years. You're going to run the phone into the ground until you get a cracked screen or the battery goes out on you. But I thought Zuckerberg, I don't think anyone terribly disagreed with him. Yeah. It's pretty known that Apple's been a little bit kind of lacking on that side. Vision Pro has been a failure for many reasons. And like in Apple Intelligence, bulls are really expecting big things on the AI front, and we're yet to get it.
I'll tell you, there's a few bulls are worried about Nvidia. I'm just looking here. We're over 4 days, we're still down 12%. Why is it still down 12% if there's nothing to worry about from, the other side of the world?
Yeah, I think first and foremost, I think the Blackwell ramp there's been a lot of issues, overheating, just lack of supply. And then there's also, you have this DeepSeek kind of rollout where, now there's a lot of investigations. How is kind of, Nvidia, how much are they selling into China? I think 20% of their revenues go through Singapore. And I can tell you, most people are kind of pinpointing that's where kind of China is securing their more advanced chips that are supposedly on the restricted list. So I don't foresee, Trump and Lutnick kind of backing down on this. They want to restrict China and their access to these chips. And I struggle to see how Nvidia isn't negatively impacted by that. With that said, the stock did act great yesterday. I think it made local lows and then it closed at its highs. But what we're seeing also within the chip world, especially at the advanced level, more of the hyperscalers are preferring ASIC solutions, so they can more customized chip solutions can lead to better performance, and they can just do more with it. So Broadcom, Marvell, those are the names where I'm seeing those Nvidia dollars flow into.
Look, we can talk about the offer on the DeepSeek story. Who are the winners of DeepSeek? I saw somebody on the show yesterday say actually Apple could be the winner because it's smaller, compacted AI, and you can put it in your iPhone, you can put it in your watch.
Yeah, that's the thinking, right? Like a lower price will eventually lead to kind of more more broad-based adoption and usage. I think first and foremost, what I've seen in my conversations this week with tech institutional investors is, obviously Monday was a little bit of panic, right? There was a lot of shoot first, then ask kind of behavior. Hardware and kind of the power names took the brunt of the P&L pain on Monday, but cooler heads are prevailing. And it's pretty much well understood that the software complex probably stands to benefit. Lower inference cost will lead to kind of lower need for power, and just continue to lead for more demand for AI agents. Lower cost will bleed into higher revenues and better margins. So to me, software seems to be at the forefront of this DeepSeek kind of revolution, whatever we want to call it. It's only been a week old, but that's where most of the dollars are flowing into. Yeah, well, that investigation is now live, we understand, in terms of how and did they get access to the chips. And as you say, that can have repercussions. Joel, thank you very much. Joel Kulina there of Wedbush on the tech agenda. We're counting down to what the announcement will be from the White House tomorrow in regards to Canada and Mexico on tariffs. The consequences can be profound on the oil market. We import 4 million barrels a day from north of the border and 500,000 barrels a day from south of the border. What you're looking at here is oil managing just to pause and drop. Goldman Sachs have a big note out. They said, look, if these tariffs kick in on oil, you're looking at $93 on WTI in the short term. Gold also just off a record high. Again, there's been a huge flow to safety in the gold market. You're just looking at this over the past, that's Brent over the past 6 months, I should say to you. There's some big issues in the oil market, because you have the prospect of higher tariffs maybe coming to bear on Russia. We'll let you know what happens with those tariffs as we go through the next 24 hours. Coming up in the show, it is the president's tariff risk. He prepares to slap Canada and Mexico with 25% levies tomorrow. More on the story in just a moment. Bloomberg Brief. I'm Manascrani here in New York. Our top story this morning, FX markets recalibrate after President Trump reiterated his tariff threat on Canada and Mexico. On Saturday, about $900 billion in goods from both nations stand to come under 25% tariffs. Brendan Murray, who leads our global trade coverage, joins me. Brendan, the start of the week we were talking about, or over the past 10 days, we talked about gradualism, universal gradualism, and here we are, we're back almost at max, max threat. Do you think that we will go to the max threat tomorrow morning, and what are the consequences economically for Canada and Mexico?
Yeah, I mean, there's a cloud of uncertainty over what Trump will do. I think there were basically three scenarios. He'll put blanket tariffs on Canadian and Mexican products of 25% and say that's it, no negotiations, it's happening immediately. This is the beginning of the big rebalancing of trade distortions that he's complained about. He could come out and say, you know, Canada and Mexico have done what I've asked them to do on the border. We'll give them a reprieve for now. Those are the two least likely scenarios. I think the likeliest would be something in between where he says, I'm going to put 25% tariffs on Canada and Mexico, but I'm going to give them a couple weeks to negotiate and try to come up with a solution that I'm happy with. That would give them a sort of a grace period for the tariffs to kick in.
There seems to be some narrative in the market that because it's around fentanyl rather than leaning into fentanyl and border control, rather than perhaps trade, that there is some light for an off-ramp. When you look at this policy, Brendan, is this driven, do you think, by supply chain or by geopolitical sphere of influence for this White House?
Yeah, the White House in Trump's first 10 days or so has indicated that it's really on two tracks here. There's the tariff threats for geopolitical purposes, the way he came after Colombia and scored a fairly quick win, at least optically. And then there's the longer-term strategy where he asked for reviews of various departments with an April 1st deadline. And that's more aimed at rebalancing the structural problems that he sees in America's trade relationships with China, with Mexico, with Canada, with the European Union. So it's really a two-pronged strategy, and the Mexico-Canada situation looks to be the one that's aimed more at the sort of geopolitical issues he's trying to resolve for a domestic political constituency.
Brendan, thank you very much. Brendan Murray on the tariff risk. Now, let's head to Ronald Reagan National Airport for the latest on the recovery effort after the deadly aircraft collision. Tyler Kendall is standing by in Washington. Tyler, we now understand all 67 people on board obviously have lost their lives. The tragedy evolves. Where are we in this recovery mission on the ground?
Well, Manus, crews worked overnight on the search and recovery mission, as you mentioned, and as we've been reporting, there are no expected survivors. We know that 64 people were on that commercial flight. An additional 3 U.S. service members were on the U.S. Army Black Hawk helicopter. Now, the D.C. fire chief said that divers have reached all accessible areas. What that signals is that the search mission will move into its second phase. Today, we are expecting divers to start to remove pieces of the plane from the Potomac River in a bid to try to recover additional bodies. Now, I was at the NTSB briefing yesterday. That's the agency that is leading this investigation. They told us reporters that we can expect a preliminary report in the next 30 days, although we could get some information sooner than that, particularly as the NTSB confirms to Bloomberg News in a statement that they have recovered 2 data recorders from the commercial flight. That's going to be absolutely critical in their investigation because, Manus, there are still some big questions remaining this morning, particularly as Transportation Secretary Sean Duffy says that this tragedy could have been prevented.
And they did make it very, very clear that they had significant amounts of information during that press conference yesterday. It wasn't that they lacked information. They had substantial information. Now, if we pivot to the White House, we had the president blaming the FAA's diversity program for the tragic accident. Let's just take a listen.
FAA says people with severe disabilities are most underrepresented segment of the workforce, and they want them in, and they want them. They can be air traffic controllers. I don't think so. The initiative is part of the FAA's diversity and inclusion hiring plan. Think of that. The initiative is part of the FAA's diversity and inclusion hiring plan, which says diversity is integral to achieving FAA's mission of ensuring safe and efficient travel. I don't think so. I don't think so. I think it's just the opposite.
Don Tyler, that was the President of the United States of America. He was not the only one on that podium who made DEI references. The Vice President was on that podium. Pete Hegseth was on that podium. All of them leaning into DEI policies. The Democrats, blaming Biden, blaming Buttigieg. I mean, it was a roll call of blaming that was given out by the White House yesterday.
Right, and Manis, when pushed on it, President Trump did not provide any evidence, just said that it was under investigation. Important to note that many of the FAA's hiring practices have been on the books for close to a decade, which would encompass, of course, the first Trump administration, and this is the first deadly U.S. commercial air crash in about 15 years now. Former Transportation Secretary Pete Buttigieg did respond to these allegations, defended the Biden administration's response, and called President Trump's comments, quote, despicable. But this is proving to be an early test for this newly minted Trump administration cabinet. You had Defense Secretary Pete Hegseth coming out. He was confirmed last week. And then Transportation Secretary Sean Duffy confirmed only on Tuesday. Important from that press conference, though, President Trump did appoint an acting FAA administrator. At this point yesterday, there was nobody helming the agency as they started to get this investigation underway.
Okay, Tyler, thank you very much. That's Tyler Kendall there with the very latest. And we'll keep you updated throughout the day with the latest from Washington. A very good morning from New York and the Bloomberg Brief. It is Bloomberg Brief. I'm Manis here in New York. A look ahead to the rest of the day. Big oil kicks off big earnings. Exxon and Chevron. Before the bell, in a few hours, Mexico's President Claudia Sheinbaum, she holds her daily news conference. Let's see what her response might be to the imminent 25% tariffs plus U.S. PCE, along with personal income. They hit the tape at 8:30 a.m. Some individual names for you. Apple, it was on the call last night that the market became a little bit more convinced about the trajectory and the future, even though China and the iPhone sales were underwhelming. Forecast, after a mixed results, one could say. Vertex Pharmaceuticals jumps after the FDA approves its painkiller as a safer opioid alternative. And Walgreens steadily decline, down 10.3%, cancelling that dividend. Suspending the dividend is a big shock to the market. Mike McKee is standing by. We've got a little bit more data to get through today, PCE and personal income. Mike, good to see you this morning. PCE, I mean, I like what Ellen Zentner had to say yesterday from Morgan Stanley. The consumer spending, it's unstoppable. But the question is, does that unstoppable spending morph itself into higher inflation?
Well, that's a question for the Fed, and that's why everybody's paying attention to this today. Although the PCE numbers are among the most anticipated, there's not going to be much surprise today because this is the third part of the fourth quarter. This is the December number. And since we got the fourth quarter numbers yesterday on a quarterly basis, economists have backed out what we're going to get. And Jay Powell announced at his press conference a 2.8% year over year for the core and 2.6% for the headline. Now, the headline goes up a little bit because of energy prices, and this isn't going to show any progress. So people are going to still be concerned about the Fed and whether or not they're going to be lowering interest rates. Right now, there's no point because inflation is not moving toward their target.
This kind of reinforces the pause, though, doesn't it?
It does reinforce the pause. We get another number today that the Fed is going to be watching, the employment cost index. It's a quarterly figure, and what it's shown is that people are making more money. The rate of wages is going up faster than inflation. So that's why we're seeing so much additional consumer spending. People can afford it at this point. It's the business spending, which we don't get today, that's been an issue.
And in terms of the rest of the narrative here, you've got a debate in this market as to whether these tariffs, we don't know what they're going to be. We don't know whether it's going to be like a mini clash like we have with Colombia or something much more substantive. And this is the quantum of unknown policy that they're grappling with, isn't it?
It is, and there's really no way to forecast what the impacts are going to be because you have to know which countries are tariffed, how much they're tariffed, what they're tariffed on, and then what they're going to do in response. And we've heard from the Canadians, we've heard from the Mexicans that they're going to respond in kind if President Trump puts tariffs on. So it's going to take some math to try to figure out the impact of all this. And it also is going to depend on how long it lasts. So the Fed can't really make any decisions until they have a lot more information.
And he was very, very clear about sort of pushing back on any of the politics here. We're not here to sort of cheer or condemn anything that comes from the White House. The other thing that we've got to consider is, even though Ellen Zentner talks about the consumer being unstoppable, the savings rate is rolling down.
It's rolling down. The question is, does it continue to roll down? We have seen a lot of volatility in that. Some months it goes down, some months it goes up, and when it goes down, everybody says, well, we're spending our savings, and therefore Americans are going to stop spending soon. But then it goes up again, and we still seem to be spending. And as I said, the wages growing faster than inflation is really what's kind of helping drive this. People feel comfortable spending some savings or spending more of their paychecks because they know they've got a little bit more than inflation at this point.
Okay, well, you break the data during surveillance, so we'll see you a little bit later on. That is Mike McKee on the economic agenda. Let me just leave you with a snapshot of what's going on with the equity markets, because we've had the Bank of America flow show come through, and I think that there's some interesting data in that. SPOs are up 0.4%. Look, technology's got a nice bounce in it as a result of the soothsayer coming through from Apple on the call last night. But this is the flow. Tech has actually had the biggest inflow in 3 months. And if you give, just think about this, just think about the near $600 billion wipeout that you had in Nvidia at the start of the week. It's still down 12% on the 4 cash trading days. Financials, the biggest inflow since January 2022. But globally, stocks having this big inflow, the biggest inflow since 2018. So the question is whether the technical recalibration has finished on Nvidia. S&P 500, as I say, into 0.4% higher. So you are just seeing this bond market count down. Bonds overall down 9 basis points in the past 5 days. One juncture we're down 12 basis points, jolted by DeepSeek. This morning we traded 453. Mike's just set the stage for the PCE and the PI, and the personal income also there. Consumer spending having the largest bump since 2023. So the markets are setting up. Oil is also very much in focus. We wait to understand if there is 25% tariffs on Mexico and on Canada. What are the ramifications for oil? Does oil get a carve out? We've given back just ever so slightly on the oil market this morning. You're importing nearly 4 million barrels a day from Canada, 500,000 barrels a day from south of the border. And the risk is this: if oil doesn't get a carve out, that runs against everything that was politically promised on the campaign trail by Donald Trump. That's it for the Bloomberg Brief team. I'll leave it with surveillance to take you through the next 3 hours of markets on Bloomberg.